OpenAI CFO Sarah Friar opened a can of worms this week when she said the company wanted a government backstop on loans to help with the $1.4 trillion in spending it has planned over the next 8 years for data centers and other infrastructure commitments. Despite CEO Sam Altman's efforts to clarify Friar's statement with a tweet almost as long as this newsletter that asserted the company is not trying to become too big to fail, and White House AI czar David Sachs declaring that the taxpayers will never have to fund a bailout for AI, questions remain. The critics are asking even more loudly, is a company that recently announced it was rolling out erotica and has yet to turn a profit already too big to fail? It's circular logic. It's more than size that has some observers nervous. As the Wall Street Journal points out, it wasn't only that banks were too big to fail. In 2008, when the collapse of Lehman Brothers triggered a global financial crisis, it's that they were too interconnected. Now, the extremely polyamorous nature of OpenAI's core investments, coupled with how the tech industry is propping up an economy teetering on the edge of a recession, has some worried that we're headed toward another bubble popping. OpenAI has billions tied up in circular investments with companies that include NVIDIA, Microsoft, AMD, Oracle, and CoreWeave, designed to help foster its build-out. And it hasn't spelled out how it plans to fund the necessary infrastructure yet. An IPO isn't expected in the near term. Not everyone's against government support. Jensen Huang, the CEO of NVIDIA, which briefly crossed a $5 trillion market cap last week, said on Wednesday that having government subsidies to support data centers is the only way to stay ahead of China in the AI race. Zoom out. As AI giants held out their hands for governmental support, investors pulled back. AI company stocks lost more than $820 billion this week, making it their worst week since President Trump's tariff announcements in April.